Good morning, it's Jonathan Barratt with the War Report. That's the week ahead report. This report basically covers what happened on the weekend, also a little bit of an idea of a lot of the what the events, the underlying themes are, and also what is really happening in terms of the economics. Also, we look at a few trends that we're liking, and maybe even provide a few tips as where we think things are going. Okay, first of all, let's have a quick view at what happened, a little bit of a summary as to what happened over in the States. On Friday night, the Dow was down 0.72% at 12,169. The S&P was down 9. The Nasdaq was down 14. The top 50 in Europe was down 20. The FTSE was down 14. The CAC was down 40, and the DAX was down 47. Local market also closed a little bit weaker, and that closed down. Where are you there? Down 28 at 48.36. So if anything there, people are a little bit concerned about what's happening, obviously, in the Middle East, particularly Libya. Seems to be that civil war seems to be attracting a lot of attention, obviously, around the world, because people are starting to view that could be mirrored in other parts of the world. People's power, disposing leaders, that sort of thing. As a result of that, we saw gold up a little bit as well, and more importantly, we saw oil break through that 103.50 area, which obviously was very critical to us in terms of where oil prices will go. And I think you'll see also that although this is the feeling that the market will, that's fear graphing the market at the moment, supply still remains not too much of an issue. However, these prices are being driven higher. As a result of that, the higher they get, the more concerned people get, and we actually see a little bit of or the chances that, one, corporate profits won't be as good as what people expected, and two, that the stimulus packages and or austerity measures which have been placed on economies will not have the desired effect as they had, given oil be trading at US $80 a barrel as opposed to 104.50. The key now here is to see what is the top side targets, and I'll run through a few things we looked at so we can have a look at some of the targets. Okay, so we know what's happening. Let's have a look at a few things. I guess the crude price is probably the most important one. And there it is there. It's better really to have a look, although that just looks ballistic, have a look at the weekly chart looks, and you can see that that's probably what you're looking at in terms of the movement. Now, this style of consolidation either develops into a head and shoulders and drops down, or this is just the start of a correction of this massive long move. Now, we're reading it as from a technical perspective only, that it's a correction of this big move. And given here, we've gone up here, we've consolidated for a while, and now this should extend itself maybe to there, maybe to 120, probably about, that would probably really be about the extent of this rally, if we're looking at it from a technical perspective. So 120, we don't feel it'll reach the 145 from pure technical view. Fundamentally, this can be blown out of the water. Obviously, if things escalate, but I think at the end of the day, the world doesn't want it to escalate. Okay, so that's looking at the crude, and as you can see, I think whilst we have that fear, it's going to continue to trade on, and as you can see, you're just getting those daily gains there on the market, and I think if anything there, that's probably likely to continue. There it is there. Big gap there when Libya came in, but yeah, still looking, probably expected to continue. But having said that, the volatility will be with us. Now, the interesting thing is how will this affect us on the other commodities? Now, I think with crude actually trading higher, it affects our primary imports. As it affects our primary imports, it reduces company profits, also then reduces the demand for other primary imports. So what we're finding is that this dampening effect should reach to other commodities, in particular copper. So when you look at copper there, it's had its run. It still looks quite strong. I think if it does take out that old high there, then it is a little bit. That's around about 465. If it takes out about 465, then it is an issue. But at the moment, expect sideways price action. But as oil prices move up, that'll have a damping effect on some of the commodities, and that's one of them. So keep a close eye on that. If you are long, just move your stops up. Okay, now the dollar index. This type of formation is generally quite bullish. And as you can see, it is. But we've got very good support down here, very good support here and here. So it might continue to be weaker, but overall I think that you'll find that we'll get strength back to it. It's been on there technically. You've got to look at these things and say, well, you know, how much further can it go? You just got to be ready to react on that break, because it could be a break of a very good trend at the top side. Okay, now obviously with all these concerns out there, let's have a look at what gold is doing. 1432, the old high is 1440, keep an eye on that. If major concerns there continue to evolve, then you'll find that the gold will also be in favour and continue to rise as well. It's interesting to note that at some stage people will start to have to think that inflation is not going to be too much of a concern if our primary inputs are too high. Okay, remember we've got a cost push, demand pull style environment here, but if we do see these oil prices start to move too high, then that will have a dampening effect. It'll also have a dampening effect on these sorts of things, so on inflation. So just keep an eye on that one there, no problems. Look at the local Aussie dollar, 101.20. You'll be able to see there that from those charts, US dollar does look a little bit better bid here. But the Aussie is working its way into this triangle. More often than not, if it breaks out to the top side, it's a good strong move, 105. But keep an eye on if it breaks down the downside. But these sorts of formations tend to give us a bit of a clue that you can go onwards and upwards from here. So just keep close to that one. Local market, obviously a bit tricky today in terms of what happened over in Europe. We did have a very strong close on Friday, and I think the market will probably say, well, let's stick with the range, just be guided by 47.80 on the downside, maybe even 47.50. If that breaks, then we do head down to 4,500. If it holds, different story. So just be guided by that break to the downside on there. Now, in terms of economic calendars, what have we got? I guess the most important data this week will be out of Australia for Australians. We've got the unemployment data on Thursday and expected pretty much no change there, leaves it at 4%. But really, when you look at it, there's a bit of data in Europe this week, but let's run through it anyway, and Japan. Not a lot of data in the States, yeah, so I think that'll be quite interesting. A little bit of data there, obviously job advertisements, foreign reserves in Australia, important there. Looking at to Tuesday, and some BRC data out of the UK. We've got some NAB business consumer confidence and a manpower survey. Nothing too much there. A little bit of optimism in the States and some data out of confidence data, machine orders out of Japan. So now moving on to Wednesday. Wednesday the 9th, a little bit of IP, trade balances out of the UK, IP out of Germany, lots of data out of Japan, still not a lot out of the US. And moving now on to Thursday, there's the big number for Australia. Unemployment rates, participation rate, expected to remain unchanged, and just a levelling off in that employment change. Apart from that, we've got CPI, producer prices all around Europe, manufacturing, production, a lot of data out in Europe, still not a lot in the States, but we do have a monthly budget statement out on Thursday there, so that could be something to keep a good eye on. And Friday, finally on Friday, CPI in Germany, PPI in the UK, and advanced retail sales. If anything in the States, advanced retail sales would be probably the key. That's the big one, which the market will focus on, and I think all signs are that should be a relatively good number. So the market might trade into that, and I think that to me is quite important. Okay, so that's really about it in terms of that. What themes have we got in under at the moment? What are we looking at? Still like some of the grains. Grains, the dollar yen, cotton, copper, corn, wheat, and soya, still like. We think that they're still looking okay. Copper, we think it's probably an idea to maybe lose some of your position there. Gold, let's see what happens there. And obviously oil, well, if you're not in on those breaks, then probably best not to, because it is such a volatile market. So pretty much that's about it from me today. Hope everyone has a good week, and we'll certainly talk to you next couple of days. Bye for now.